There's one thing that's much worse than inflation, and that is deflation. And right now, China has a huge deflation problem, which puts it in the exact opposite scenario as the rest of the world. So in this video, I want to give you all the facts so you know exactly what's going on, and more importantly, I want to talk about what this means for the rest of the global economy. Is it contagious and will it spread? I think the answer to that question might be more shocking than you think. So let's get right into all of that. As always, my name is Derek and I got my degree in finance, so you don't have to. Let's talk about this stuff. So for the past couple of decades, China has been a growth monster with annual GDP growth of above 10% on average. Now that all came to a screaming halt during the pandemic. Yes, that thing that affected every single world economy in one way or another. And that's mostly because the post-pandemic recovery for China has been a lot weaker than expected and a lot weaker than the rest of the world. And that mostly has to do with low consumer confidence, as well as a huge real estate crisis that's going on and a ton of government debt, which is now above $12 trillion. So to get the whole picture, we have to talk about the domestic problem as well as the international problem. So let's start with the domestic supply and demand issues, and then we will move on to the international problems, which are a little bit more interesting. So on the domestic demand side, there is lower demand because Chinese citizens are keeping more money in emergency savings. On top of that, there is also high unemployment, especially in the youth employment market, which is around 16 to 24 years old, where unemployment is over 21%, which is a record high. And of course, less working means less money going around and less demand, which lowers prices. Now let's flip over to the domestic supply side of things. Real estate prices are in the gutter, mostly because of this huge real estate crisis that's currently unfolding. I'm sure you remember the problems with Chinese real estate developers like Evergrande and Country Garden. If you don't, I have videos breaking down both of those in the description below. On top of the real estate problems, we also have auto prices that are being cut, and pork prices, which is a huge industry for China, have plummeted over 31%. So domestically, both on the supply and on the demand side, there are pressures that are causing deflation. But now let's talk about the international side of things, which is quite interesting, and it also relates to what this means for the rest of the world. So internationally, this primarily started in processed raw materials, which have seen price declines. Here's the thing though, that spilled over into consumer goods, because lower prices for raw materials means lower prices for finished goods. And all of that has caused deflationary pressures in the export market for China. So much so that since May of this year, Chinese export prices have fell a whopping 18%. They've also fallen 4.1% to the United States, as well as 15% to the European Union, both of which are huge markets for China. And on top of all of that, the Chinese currency, the yuan, has fallen against other currencies. Now, usually when a currency falls, it means inflation. But here's the problem. Because China is such a huge exporter, this basically means that they're receiving less money for the products that they export. Let me explain. If 5 years ago, a Chinese exporter had a product, and that product was 100 yuan, and they could receive $50 in return, that is much different than now when, say, that exact product only receives $25 for those same 100 yuan. So basically, exporters are making less money on their goods. Again, less money means less demand, which means deflation in the domestic market. And in order to get the full picture, we also have to look at one more thing, which is the periods of lockdown. You see, in 2021 and 2022, the rest of the world was reopening and there was a ton of pent-up demand. At the same time, China was re-entering a lockdown period. So you have a ton of pent-up demand for everything like entertainment, like products, like vacations, everything. China supplied a lot of those products. China was going into lockdown when the rest of the world was coming out of it. This means there was a ton of demand and not a ton of supply. This is a huge reason why the rest of the world experienced inflation. But right now, the opposite is happening. Pent-up demand is starting to diminish and people are going back to their normal ways of life in a year where China has come out of lockdown and supply has ramped up, which means lots of supply and not a lot of demand, which again means deflation for Chinese goods and the Chinese market. And all of this put together brings us to the most important question. What does this mean for the rest of the world? And is deflation contagious? Well, believe it or not, this could actually have a positive effect on the rest of the world. With one big caveat, as long as it's not long lasting. Let me explain. So for example, JP Morgan expects that China's deflation problem will actually lower global core goods inflation by about 70 basis points. Why? Well, precisely because of what we talked about earlier. China came out of lockdown and supply ramped up, but pent-up demand from the rest of the world has come down, which means we have excess supply. AKA, more supply, less demand, lower prices. And on top of this, the lower prices coming from the Chinese export market will cause other producers and other exporters from other countries to lower their prices to stay competitive against China, which will in turn help inflation around the world. But remember, too much of anything, even a good thing, can turn into a bad thing. You see, it's a positive right now because the rest of the world is trying to fight inflation. But in any other environment, this deflationary pressure could actually be a negative. Because if we didn't have overall inflation right now, China's deflation could spread as other suppliers continue to cut prices to stay competitive. Which means as we progress into 2024 and inflation across the globe mellows, if deflationary pressures continue in China, it could continue to force other suppliers and producers to keep cutting prices to stay competitive against China. And that's the scenario where you get this deflationary spiral, which is super bad for the economy. Why? Well, if you and I both know that we can get the same thing a year later for a cheaper price, we have incentive to hold on to our money. As more and more people do this, less and less growth takes place in the economy and you actually get economic shrinkage. That is why deflation is so dangerous, even though it sounds on the surface like a good thing for most people. Now, that's probably not going to happen, mostly because right now the entire world is fighting off inflation and this should only help. But it'll be interesting to watch as we move into 2024 and as inflation starts to come down across the globe. I hope this video was informative in regards to what's going on in China and deflation in general. If it was, please consider subscribing. This is a relatively new YouTube channel and it's something that I love and I want to share with you guys for many years to come. And don't forget to turn on the bell notifications so you don't miss the next video. We usually do videos on Tuesdays, but sometimes I'll do a video Wednesday, Thursday, or Friday. If there's something serious or important that we need to talk about, like a Federal Reserve meeting or like a change in policy or something that needs to be brought to your attention, I will make sure to do that as quickly as I can. Other than that, I hope you have a fantastic rest of your day, a fantastic rest of your week. I hope you had a fantastic and happy holidays, and I will see you in the next video and in the new year. Take care.